Hello and welcome to this Moneycontrol live broadcast. I am Yatin Mota and I will be presenting the closing bell today. Obviously, it was a great day for the markets. Today was the Nifty rebalancing, and in the last half an hour, we saw a lot of cash volumes pick up in few of these stocks. But more importantly, it is the end of the financial year, and tomorrow will be the Nifty expiry for the March series, and we'll start the April series from tomorrow onwards. So quite a busy week and obviously a truncated week because Friday is a market holiday. Let's talk about the markets today. Sensex ended by up by nearly 500 points, and if you look at the Nifty, it ended close to the 22,123 mark. So good gains coming in for the Nifty, which was probably trying to defend the 22,000 mark yesterday. And finally, we had almost 120 points rally on the markets today. Nifty Bank also gaining by nearly 200 points, and the action clearly was in the mid cap stocks, wherein we saw some selective buying happen in trade today. The market's advance decline ratio was broadly 1:1, and if you look at the sectors today, we had real estate, energy and auto stocks leading the markets, whereas PSU banks and IT stocks were struggling in trade. Obviously, today's star performer was Reliance Industries, and we'll talk about that in detail. But Reliance Industries, the shares ended almost near at the day's high, about 3.5% higher. Bajaj Auto, Maruti were the auto stocks which led the Nifty higher, and Titan and Bajaj Finance were the other stocks which were gaining in trade. What was also doing well in the market were stocks like HDFC Bank, ICICI Bank as well as Axis Bank. But if you look at the losers, obviously there was a Nifty exclusion on UPL, and hence the stock was down under pressure, 2.5% down for that name. Hero MotoCorp, Wipro and Coal India were the other stocks which were slightly under pressure. In the mid caps, let's talk about few select stocks. Stocks like NLC India, Olectra, JM Financial, IIFL, all of these stocks were doing extremely well. In fact, IIFL and JM Financial spiked nearly 10% in trade after the recent correction. On the losing side, we have the Aster DM Healthcare, 7% lower after the block deal. So was the case with CDSL, ending low by nearly 6% after the block deal which happened on the stock exchanges today. Relaxo as well as Solar Industries were the other stocks which saw some bit of selling pressure, especially at the March series. After the UBS upgrade, we had ABB, stock moved nearly 6%, Mankind, Siemens, Dixon were the other stocks, especially in the F&O segment. Dixon did extremely well. But let's talk about Reliance Industries in detail with a standard disclaimer that Moneycontrol is one of the business units of Reliance Industries, and Reliance Industries controls the management as well as the overall operations here. Goldman Sachs has come out with a report today on Reliance Industries, wherein we saw some good action today. In fact, Goldman Sachs believes that from here on, Reliance's EBITDA will grow at a healthy pace of 17% compounded till FY27. As far as business segments are concerned, according to Goldman Sachs, they believe that retail with rising footfalls and same-store sales growth, as well as a possible tariff hike in the telecom segment, will probably boost earnings from here on. Obviously, when it comes to the cash returns also, we have Goldman Sachs which believes that Reliance will be able to generate a healthy return of 12% on the cash deployed. And obviously, we are at the end of the capex cycle, because in the last 10 years, Reliance Industries has spent nearly $125 billion on the telecom as well as petrochemical business, which will start yielding smart returns from here on. So that's the story of Reliance, wherein Goldman Sachs today has reiterated a buy with a target of 3,400. So Reliance, top Nifty gainer, ended the day's high, and as you can see on your screens, the chart of Reliance Industries looking smart, 3.5% higher for that one, with almost 2,985 being the closing price in trade. But since it's the financial year end, FY24 has been quite great in terms of the overall performance, be it mid caps, be it large caps. This year was quite good for equities. Whether or not the trend will change from here on, how to really approach the markets. So today on the show, we have Mr. Dani, Rahul Dani, joining in from Monarch Capital Limited. He is the Vice President there. Rahul, welcome to the show. Thank you so much for taking out the time and joining us live on the show. Let's talk about the year gone by. FY24 was quite strong in terms of mid-cap returns, in terms of the market returns. Do you think FY25 will be something different, or do you expect the market to be stock specific from here on?
Yeah, thank you, Yatin, for having me on TV. So Yatin, yes, FY24 has been an exceptional year for the equity markets, barring the last couple of months. What we do anticipate is that, post the elections and, given if we do see the general consensus is that, we should see a straightforward victory or, better than anticipated victory for the ruling party, then, markets should see a strong rally. But Yatin, what largely believe is that the long-term rally would be driven by stocks which have sustainable earnings growth, strong management pedigree, and which are seeing industry tailwinds will be driving the overall market in FY25, is what as a house we believe.
Right. Rahul, talking about the mid caps, which have seen smart returns. In fact, any portfolio manager you speak to, or if you look at the index, 50, 60, 70, 80% is the kind of returns which have been getting generated. In general, as a house, do you believe that FY25 also should be well for mid caps in terms of earnings and price appreciation for the investors who probably have already stayed invested? What would be your personal strategy when it comes to the markets, especially for the mid cap space in FY25?
So yes, I agree. I think FY24 has been an exceptional year for mid caps as well. We've seen strong re-ratings across sectors, across stocks. But I think what we believe going forward in FY25 is that in specifically with mid cap space is what we will see is quality stocks with quality earnings will see a meaningful re-rating, while stocks with lackluster earnings will kind of start seeing a sharp decline in pricing and rating because most of these stocks have seen a meaningful PE rating. And in order to sustain this PE rating, I think it's going to be the stocks with which gives quality earnings and with industry tailwinds their way will drive the mid cap sector going forward. We do believe stock specific stocks will do well for the mid caps going forward,
Correct.
especially in FY25.
Right. Rahul, you have a lot of stocks under your coverage, and you look at a lot of mid caps. Talking about the FMCG space, stocks like Sula, Mrs. Bectors, La Opala, all of these stocks have done well in FY24, and you have your coverage on these stocks. How will the
Right.
earnings trajectory look for all of these stocks, and how do you really look at all of these stocks? Do you think these stocks will probably have some good earnings and share price return in the next 6 to 12 months?
So, Yatin, if we talk about stock specific, let's look at Mrs. Bectors. We initiated Bectors in July 2021 at the price of 320. At that time, the company was going through a lot of management changes, and that has kind of kicked in now. They've kind of enhanced the distribution reach. They've spent aggressively and increased the capacity and their product reach, which has led to consistent revenue growth and margin expansion for the company. And especially if you look at Mrs. Bectors compared to its peers versus Britannia, they've outperformed in terms of volume growth. And we expect this to continue for Mrs. Bectors as well. We do anticipate a 15 to 17% revenue growth for Mrs. Bectors going forward. This would be largely driven by distribution expansion because that was something which was lacking in with Mrs. Bectors. They had a great product, but the distribution was kind of missing, and they worked really hard towards it, and they're still working towards distribution expansion and increasing capacity for their products. So we do believe that in Mrs. Bectors, there is enough opportunity for them to kind of continue to increase penetration levels. So given that, we do expect the Mrs. Bectors to continue to deliver 17 to 18% revenue growth, with margins being stable at this environment, given the volatility in raw material prices, and earning growth of close to 20-25% as well. For Mrs. Bectors, we do have a target price of 1350, and we believe it would be one of the large, it would be leading the FMCG pack going forward as well. Similar to Sula as well, we like Sula, we like the business model of Sula. I think they have been the category leaders in the wine category. They are the ones who created the entire wine category in India with the Sula Fest and all that.
Correct.
And if you look at their margin trajectory, and if you look at the overall consumption of wine in the country, it's just on an increasing trend. And now we've got some clarity as well from the Maharashtra government regarding the whip scheme as well. So we do believe wine as a category will continue to outperform other categories. And we do expect Sula to also to clock a good 15% revenue growth, while margins will be at 30%, which is still industry leading as compared to someone like a Radico, which does about 11% margins. And that would cultivate into strong earnings growth as well. Management pedigree is strong. They have a very, very good, strong farmer relation, which is key when it comes to wine. And yeah, the brand is the biggest moat for Sula. So we do
Correct.
anticipate good growth for Mrs. Bectors and Sula going forward
Correct.
in terms of earnings and in terms of overall return ratio profile as well.
Correct. Rahul, one space which has not seen a slowdown, is the luxury segment, and we have been obviously talking about it. Stocks like, Landmark, which are, one of the largest agencies for Mercedes-Benz, they have also recently started distributing other, auto products like MG Hector, so on and so forth. And on the other hand, we have Ethos, which has been looking at the watches segment in the luxury segment. A lot of volume growth and traction in earnings. How do you see both of these stocks performing moving ahead, and what would be your target on Landmark and stocks like Ethos?
Sure. So, Yatin, just to give a small brief, Ethos, we initiated at 900 levels.
Okay.
At that time also when we initiated, we had a lot of apprehension, a lot of people had apprehension about the earnings growth. But if you look at the last 8 quarter revenue growth that they have delivered an average growth of 35% on the top line level. Ethos is the only listed pan-India player for luxury watch retailer with a very passionate promoter. The kind of brand relationship they've been able to develop over the last couple of years is phenomenal. Just if you look at their branded profile, the exclusive brand profile, they've done exceedingly well for Ethos. And Yatin, you might know recently India and Switzerland have signed an
Right.
FTA. So what that would do as well is that, this would not necessarily reduce prices of watches, but what this would do is that would increase the number of brands looking to enter India. So, we still, as a country, we don't have many brands which are there in India yet. But, given that the FTA is in place now and we should start seeing meaningful reduction in duty for these watch manufacturers, they would look at India in a more meaningful manner. The FT will also kind of enhance someone like Ethos's margins in the long run, once the FTA comes into place. So we are firm believers that the luxury story is here to stay. Ethos is the forefront in for watch luxury manufacturer for
Right.
watch retailers. We do have a target price of close to 2,900. The stock has seen a strong, sharp increase. So we do anticipate a consistent performance in Ethos. They've entered new categories as well, which should kind of support the growth overall as well. Yatin, coming to Landmark as
Yeah.
well, Landmark is a very unique business model. The kind of relationship they have with the OEMs is something, and is the biggest strength and the biggest moat for the company. Like you alluded, they're 16% and the largest retailer for Mercedes in India. Recently, they've signed up with Mahindra and MG.
You're right.
And, we're seeing, aim for BYD, we're seeing increasing traction. And sooner or later, the registration, the restriction in BYD will be lifted. So there will be a huge beneficiary for someone like a Landmark whose business model ensures that the car keeps coming to the service center and after sales gives them a very, very strong return ratio and margin profile. And again, Landmark have been pioneers in this whole
Correct.
auto dealer. They've professionalized the entire thing.
Mm.
Uh, so we do see a very, very good and strong opportunity in Landmark, given the business model, the OEM relationship they have, and the new geographies they've entered into. So as a category, you're seeing the mid-premium range doing really, really well, the 10 lakh above category, and I feel that's where Landmark has made
Correct.
its name. And we see the growth continuing there.
Mm.
We do believe the problems what they had with Jeep and other OEMs should kind of play out throughout the next year. And we do see a strong growth opportunity in Landmark. So our target price for Landmark is about 900 levels from here. which is a 23% earning CAGR over the next 2 years
Correct.
for Landmark.
Rahul, you've spoken, a lot about your stocks and how, they have moved. But stocks in the descending order of return, which can be generated in the next 6 to 12 months, because our viewers are looking for those stocks wherein there could be good return potential. So, in your coverage, what are the 2-3 stocks that you are currently recommending your client, and that could see some good 25-30% plus kind of a run, in terms of the share price?
So Yatin, we discussed Sula, which we have a 35% upside in Sula. We also like this very niche company called Goldiam International, which is into lab diamonds, and they're the largest lab diamond retailer in the US from India. So we do see a good 30% upside in Goldiam International as well, and same in Landmark Cars as well. We see a 30% upside. So a couple of SLO as well. We have 45% upside. So these couple of stocks we do believe offer an attractive price for investors to enter into. All of these stocks are backed by strong management and strong industry tailwinds coming their way. So we do see good growth in these stocks.
Correct, Rahul. And before leaving, any disclosure that you would like to talk about?
So yeah, as a house, we don't own any of these stocks, not personally or as a house.
Okay.
Yeah, that's the standard disclaimer.
Okay, so obviously you have recommended these to your clients. Rahul, thank you so much for speaking to Moneycontrol and sharing your thoughts and giving us the recommendation list that you are probably looking in terms of good returns which can be expected by investors over the next 6 to 12 months. So that was the view coming in from Monarch Capital. A lot of mid caps to watch out for. Stay tuned to Moneycontrol for more news and updates. Thank you so much for tuning in. We'll meet tomorrow with the opening bell.